Well, here we go. Adobe stock, what a dive it took yesterday. The stock was down 16% yesterday, and going into pre-market, it's also down 2%. So clearly, no one is fancying this dip on Adobe at the moment, and it's very rare to see someone like Adobe have a dip. This is one stock that's kind of been a gem of the stock market in the last few years. If we just zoom out a little bit, you can see here, really since 2017, the stock has been on a fantastic run from $148, and it peaked around that November time, as a lot of stocks did, before we entered the bear market, and it was $688. And since then, the stock is now down 55%. And it's very rare that we've seen Adobe have a dip like this. I think the last time we saw Adobe have a dip like this, obviously you can see there's a few dips in this period of time, like the CV time, but even in the CV times, it only drops there 19%. The last time it really had a major dip like this was actually during the tech bubble. That's correct, that 2001, 2002 period of time where, so many stocks got hit absolute amounts. Last time it was down that much was that period of time where it was down 70%. So yeah, this is the biggest dip that we've seen Adobe have for 20 years, and we're going to take a look at it today and why that is happening and if it's a buying opportunity. If you don't know, Adobe is a company that develops a lot of software platforms. They have a variety of products, whether it be the cloud products, a lot of the designing products, the documents. There's a lot of features that they have, and I'm sure you probably use at least one. Personally, for me, I'm someone that uses the cloud platform. I use the Premiere platform, the Photoshop platform daily, and I subscribe to their products monthly. Adobe was actually the king of the SaaS model, really. They were the first business that I remember back in that kind of maybe during that 2018, I think that was when it really started taking on, as they started moving a lot of their platforms to kind of the one upfront payment, and they moved it to lower monthly payments, and yeah, they obviously really did help their income from that point of view, and more people using the products, and yeah, from there I think they were kind of coming the kings of the SaaS models from there. Nowadays, Adobe is an absolute monster of a company. It's actually a 144 billion market cap company, making it one of the biggest companies in the world at the moment. And if you actually look at the holdings of the Nasdaq, you'll be able to see that Adobe is currently the 13th biggest holding in there, and that was a key driver why we had such a bad day in the stock market yesterday. You had seen a lot of the indexes down over 1%. Adobe was one of the key reasons, because obviously that dragged it down over 16%, and actually in the last month it's down 30%. And funny enough, a lot of the big tech had a bit of a rough day yesterday, but I don't know about you guys, but my portfolio actually performed really well yesterday, whereas a lot of the big tech was kind of coming down. Still, a lot of them smaller mid caps was actually performing quite amazing, and that was the power of Adobe kind of dragging down the whole market after the news yesterday. But we'll take a look at what's going on with the business and the move that it's making here. So the business brought out its earnings. During that period of time, it also announced a acquisition, which was probably the main driver of why the share price dropped. So we'll talk about that acquisition in a few minutes. But the business itself came out with EPS of 340, beat by 0.006, which is good, and the revenue of 4.4 billion, which missed by 10 million, which when you're doing 4 billion in revenue, a 10 million miss isn't that much, so I won't be panicking about that too much, which should offer a 12% year-over-year growth. And when you look at the revenue point of view, they offered a consensus that was slightly below what was expected, but the EPS was a little bit above consensus, so bit of a mixed bag on the guidance point of view. Not sure if that had much effect on it, and people were a bit unhappy that the revenue was coming slightly under than what was expected, but nothing too major of a shock there. But one of the first things when I was really looking into the dip of Adobe and thinking, okay, could this be a really interesting time to be buying this stock? When you have a sell-off, a 16% sell-off, that's a big discount on the stock, and it's really important to see, okay, is this a bit of an overreaction? Is the business kind of still in the same place? Is it in a good place? And this is a really good buying opportunity into a quality stock like Adobe. As we've seen, it's really had a dip. So the first thing when I studied Adobe is I looked at the revenue growth, and I saw it growing 12% year over year, which is still, there's a queue of companies that wish they were growing at 12% a year, which is really good. But for me, I look at Adobe, and I remember Adobe historically was a 20% revenue growth company. I remember in 2019, you can see here 23%. 2018, 2017, since I've been in the stock market, I always remember Adobe having really strong amounts of growth. And originally I was looking at Adobe thinking, okay, it's on a bit of a drop here. It's the same sort of price that it was back in, we're going quite far back here, November 2019, a massive drop off there. And I started looking at that and, at 30 times earnings, and I'm starting to think to myself, for a 20% revenue growth company that's, doing great amounts of profit, that all goes to the bottom line. If they can lift that profit up by them sort of same rates as revenue, it's not a bad valuation here. But one of the big worrying signs that I saw is that in 2020 it had a bit of a drop because of the CV situation, I'm guessing, and then in 2021 it did go back to 22% revenue growth. But then when I looked at this year's forecast, I was like, okay, currently at year 11% growth, and then when I looked at the next year, 13% revenue growth. So I was like, okay, this company is not at the growth rates that I remember it used to be now. It's a bit lower. Don't get me wrong, it's still a very good growth rate, just not as quick as what I thought it would be, and it has slowed down slightly, which will happen as you're a bit of a more mature company. Your growth rates will slow down, but I was quite shocked to see it had slowed down by that much. But if we do look at the product itself, it's still holding on. This is crazy. 87% gross margins. That's correct. 87%. I mean, I don't know, I can't remember at the top of my head if I've ever seen a company that has 87% gross margins. That's insane. And that leads them to do 30% profit margins. They're really good amounts of profit margins. And you can see here, the company's always had a track record of, really good amounts of revenue growth, really good amounts of profit growth. And like I said, as long as it keeps translating that revenue growth and still translates that into profit growth, obviously it's a very good business. My only thing is that it's forecasting to grow at 10% rather than 20% revenue growth and profit growth, which is my only other concern. When I look at the financial health wise, it's still in a very good healthy place. As you can see here, it has got some debt on the balance sheet, but it's holding around 30% debt to equity. And there wasn't too much going on in the insider front, more selling than buying, I would say, which is probably not a great sign if your stock's down as much as it is at the moment, but nothing too crazy going on there. So I did look at Adobe's revenue growth, and I wonder if this links to what we're going to talk about now, which is probably the reason for the drop, which is the acquisition they made. So on this day, when earnings came out, they also announced an acquisition, which is Figma. And you'll see here, there's a lot of people at the moment saying they have massively overpaid for this business. So first of all, why would they go out and buy Figma? Well, it's a bit of a rival business. Adobe has a amazing product line. And you would actually say that their products could basically do what Figma does, but they've chosen and gone out and bought Figma. Why would they go and do that? Well, that says to me that for 20 billion as well, Adobe at the moment, their products are maybe getting to a point where they're not as untouchable as they used to be. For such a long period of time, a lot of Adobe's products were untouchable. Everyone knew that they had the best kind of editing, developing software programs, and the fact that Adobe now are having to go commit 20 billion to go buy out a particular rival, and a few people would say their product is a very good product, I think worries people and worried me slightly to see that Adobe is growing at slower rates. They're having to go out and buy, a big valuation for a rival. Kind of says to me that Adobe have been a little bit slow in the last 24 months of developing and improving their products to beat some competitors, and that never used to be the case. That never used to be the case that Adobe would go do that. Adobe was always the kind of the untouchable big dog out there, and for them to go commit this much to a rival, I think is a sign of Adobe's management being a bit scared of going, okay, we've got a bit of competition out here, our growth rates are dropping, we're going to have to go do this move. And I think that's what's kind of spooked everyone. The kind of seeing Adobe never doing this and paying such a big amount, I think kind of spooked Adobe. And I've got to say, there's a few programs out there that I've recently been noticing that Adobe still has fantastic products, but I do look at some of the products that are coming out for a lot of like editing, developing, and I do look at and think, Adobe could have done something similar or just as good, or maybe could have bought them out at a bit of a lower fee. And I do kind of look and think, well, maybe Adobe has been a bit slow to kind of react to a few competitors in the last 24 months, and that's maybe caught up with them a little bit recently from, as you can see, this kind of big acquisition that they've had to make. When we do look at the acquisition of Figma, they actually bought it for a cash and stock acquisition. Now, they paid 20 billion for this business. And when you look at Figma, I wanted to have a look at how this business is doing. So obviously software design, Figma is now worth 10 billion. So that was when they did a new funding round, and this funding round was done on the 24th of June 2021. So you can see here, only a year ago this business was valued at 10 billion. So in a year's time, obviously Adobe have paid double the valuation in a year's time from the last funding round, which is a massive jump up. And the big thing as well is, considering that this was on the 24th of June 2021, you know, you look at the environment, look at the stock market, what has happened in a year's time. You have seen the market in general, valuations absolutely slump in the last 12 months. So to have a valuation that's doubled, and not only doubled in a year's time, has doubled in a period of time where so many businesses have had their valuations absolutely decapitated, and they have paid double for that valuation. That's already alarm bells going off that, okay, that sounds a bit risky to me. And that's the first thing. The next thing is actually when you look at Figma itself. Now, Adobe have already come out and said that basically this is going to have a negative impact on earnings because they're a business that is currently unprofitable, which is obviously not a great thing. Also, then to top it off, you've got that when you look at the actual business itself, Figma at the moment is, as of the last data that I can find, which is obviously pretty tricky because it's a private company, they were projected to do in 2021 51 million in revenue. Yeah, that's correct. Not 51 billion in revenue, 51 million in revenue. And what did Adobe just pay for this business? Adobe paid 20 billion for this business. That's correct. 20 billion for a company that does 51 million in revenue. I mean, I've just literally about an hour ago posted on the Discord, and I said it was like something like 300 times sales. I'm going to actually just double check. I think it was 293 times sales, which is so steep. So steep. I know, you talk about a platform that's growing at really good rates, but you've got to take the valuation check in, and I mean, you'd be looking at this one and going, okay, it's doing 51 billion in revenue. It's very hard to tell because we've not got all the full financial details here. But I mean, even if they walked away, they said that you paid 5 billion in revenue. If you paid 5 billion in revenue, you'd be like, oh, okay, that's a big amount, but fair enough. If they think they can work it into the platform, it stops competition, they think it'll work, 5 billion, okay, fair enough. And then you go to 10 billion, you're like, okay, that's quite a big payment. But then to go to 20 billion is a massive, steep bet into this business. So, I mean, there's a lot of pressure. When we see this quite often, there's always, whenever a business makes a big acquisition, you'll very often see the stock or the share price, be very negative after that news, because when you make a big acquisition like that, a lot of investors, a lot of Wall Street will get nervous and go, if you're paying that much, if you're paying 20 billion, you've really got to make that acquisition work. And you'll see that often. If a business comes out and makes a big acquisition, Wall Street gets nervous because that's a massive amount you're paying for it, and you've taken a big risk on, and you've got to make it work. Sometimes they do work, and they can be an amazing acquisition, but quite often they're viewed quite negatively. And we know Adobe, loves making acquisitions. I mean, they've got their own Wikipedia page. They made that many acquisitions. They'll make probably a couple a year. But you'll be able to see that when they do historically make a lot of these acquisitions, a lot of them do sit around that kind of, Frame.io, 1 billion, Workfront, 1 billion or 1.5 billion. Even one of the biggest acquisitions, Marketo, was 4.7 billion. So to go for 20 billion is one of the biggest acquisitions is the biggest acquisition they've ever made in the company's history. And that's where obviously the risk does kind of come on. So we'll see what happens there. I mean, there's always the risk that actually some of the regulators maybe come down and say, they've kind of seemed to woke up in the last kind of 12 months and kind of gone, I think we better do our job as like competition, kind of like watchdogs here, and like if there's a lot of strange activity going on in the sector or buying the kind of getting a monopoly on the sector, we better stop this acquisition. They kind of seem to, out of nowhere, woken up in the last 12 months. So, I mean, they might have something to say about this. Well, I don't know. We'll see what happens there. But yeah, overall, my thoughts are with Adobe. I still think it's a fantastic business. I mean, the gross margins are insane. You look at they're historically a great performer. The products are amazing. I think they'll still perform amazing. The revenue should grow, profit should grow. Granted, a little bit slower than what I thought they would carry on growing, a bit slower growth than what I've ever seen them do. And obviously, we like we said earlier, maybe that's just because they've been a bit slow to develop and catch up to competition in the last few months, and it's kind of caught up with them. Maybe it's a bit of a wake-up call. Maybe they get this Figma acquisition and they make it work. But yeah, I do think they did overpay for it. But I still think there's a quality business over here. I just think there's obviously a few little concerns that they do really need to improve on. But I still think it's a very high-quality business at the moment. And for me personally, where does it leave me with Adobe? Well, I've got to say, I always said Adobe at $688 was just absolutely insane. I can't remember exactly. I think it was trading at like 60 times earnings or something, which is just absolutely nuts. Obviously, it's had a bit of a reality check. It's down at $309. In pre-market, it's touching $302. I do really love Adobe. I've got to say though, obviously, it's not the company that it was, a few years ago. It is growing a little bit of a slower rate at the moment. However, it's still fantastic. I think personally for me, I think paying up 30 times earnings for this business is probably still a little bit high for me. I think I would have to see maybe Adobe. I think I would have to see it come into the $200 range. I think if we start talking Adobe like $280, I think that's probably where I could actually have a bit of a bit more of a serious look at this business. We start talking about Adobe coming down into that 25 times earnings. That's probably where I'll maybe have another look at Adobe. But yeah, I think right now, I think there's a few other, big techs on sale that are just as good. Whether you're looking at like Google or Meta or PayPal, I think there's still opportunities that I prefer over Adobe. But it is getting a lot closer to the buying range right now for me. And I do think, if you say where's Adobe going to be in the next 5 years, I do think it'll be higher than where it is right now. I just want to have a bit more upside for me to jump into it. And that's where I'd be happy probably to buy it. But yeah, that's a little update on Adobe, guys. Hope you enjoyed it anyway. And if you could hit that like button, that's absolutely amazing. And yeah, I'll see you in a bit.